Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Let's go ahead and get started with our morning analysis. And like I said, you're going to have to excuse me. My nose is stuffed up. I'm like a little runny. So if I sound a little funny, if I'm sniffling a little bit, just have to bear with me today. Okay, let's go into the euro dollar. Let's start there. So the euro broke a downtrend line, and I don't know if you guys recall from last week, I wanted to be short the euro dollar as it approached 110.60. Now we did overshoot. You'll notice how we overshot the 111. In European trade, I actually shorted the euro at 110.72, like right here, about an hour ago. So. Okay, I'm more looking at it as, well, I'm looking at it a couple different ways. First of all, see this blue downtrend line? It is taken out. Okay, so that I am very aware of. Okay, so let me delete a few things here. You know what? I'm gonna delete everything. Just go from scratch. Okay, so I am aware of this. I'm very, very aware of this move here, okay? And I'm aware that we overshot the 618, and I'm also aware that we overshot that resistance as well, okay? Now, I think the dollar got a little, a little ahead of itself here, or the euro got a little ahead of itself in European trade, okay? With gold coming down, with crude coming down, I think the dollar should be supported. You're obviously seeing the dollar Canadian supported right now. The biggest problem the dollar has is the dollar yen, which I'm short, which I'm, fine with the dollar yen. It's just it's weighing on the dollar across the board. But with stocks falling, the yen pairs may continue to fall, like the Aussie yen, the euro yen, the Canadian yen, those types of currencies. So with that being said, the euro dollar may start to find some resistance here. Now, if you go from the highs, okay, the actual trend high over here around the 114 level to the low, the 50% retracement also comes into play. So you see the 50% and the 786 both come into play around this 111.30 area. So my opinion is this resistance right here is going to be very significant. Now we spiked up to today 111.13, but any move up towards 111.25, that's going to be some pretty critical resistance, even if we do hit new highs, 111.25. Okay, that should be a very significant, multiple fib confluence resistance up there. Stand by. Now, in turn, this is also, helped, obviously, the improvement in the euro crosses. I mean, you got euro Aussie is rallying, euro Canadian, euro Swiss, euro yen. The euro crosses are really significantly rallying, and you can see here that if you look around, it's mostly just the euro. I mean, here's the euro dollar up 110 pips, pound's only up 30, Kiwi's up 35, Aussie's up 5 pips, dollar Canadian's unmoved on the day right now, and even the Swissy, is down 56 pips, which means the euro Swiss is higher. So I mean, you're seeing this is a euro, cross rate move, okay, which started really on Friday. Now, where's support in the euro? So the euro should find support now on any dip back down towards, well, probably this support here, which will be 110.15. So 110.15 will be pretty big support, and we are in a big range. All right, let's go into the cable. So the pound's up a little bit, but I think the euro pound rally is really what's probably weighing on the cable quite a bit. Now remember, we do have UK GDP readings tomorrow, which will be a market mover. But my fear is if you're long the cable here, if the euro dollar comes under pressure, the pound's probably just going to come right back under pressure too. Okay, so previous support was at this 155.40. Okay, remember that was a pretty strong support. We had 155.30. We're obviously struggling on the way back up now. Okay, and you can see that previous support, current resistance. So now the high at it's 155.43. So 155.55 or 45, excuse me. 155.45 is going to be resistance. Support is obviously key down here. So any dip down towards 154.60. The low here is 154.50, so 154.50 is going to be support. And we are definitely in a range here. Okay, stand by, guys. Okay, let's go over to the Swissy. So the Swissy is still my, well, now that I'm out of the Canadian, the dollar Swiss is my dollar position, basically long. But remember, I'm short the dollar yen in the same, basically in a hedge position. But I like the way that the Swiss pairs are acting. You look at the Euro Swiss, the Euro Swiss is really strong. You look at the dollar Swiss. The dollar Swiss is obviously it's holding up pretty well, considering the euro's up 100 pips. We're not getting that, I mean, the euro's up 108 pips. The dollar Swiss is only down 55. So we're definitely seeing, the weight of the Swiss franc. Okay, traders are, trying to get out of Swiss francs, and that's prevalent here in the dollar Swiss. So you can see how the dollar Swiss, it's dipping to the big support at 155 95.30, excuse me, and then being very well supported there. We were supported there last week. We're supported again. This is a very big breakout point. Okay, you can see this big, rounded bottom here. That breakout's still holding. We're just not able to build on the flag pattern yet, because of, generally speaking, dollar weakness. But what that is signaling is that we're very, very well supported here above 95.20. And that is building a case eventually for a breakout to the upside. Now, we just have to figure out where, the breakout point is, which I'm assuming is 96.50. So 95.20 to 96.50, and you probably just want to be a buyer on dip. So when it dips down here towards the low 95-cent level, you will just want to be a buyer down here. Okay. And this is still bullish. It was bullish from last week, and it's still bullish. It's still holding onto that bullish tone as long as we hold above this 95.20. Okay. So as long as we can hold above these spike lows, it still remains bullish. It's coming out of a range. All right, let's go over to the dollar yen. Now, in contrast, the dollar yen, you can see how it's rolling over. Now, one would expect yen strength as the stock market is showing signs of weakness. So we're seeing the yen strengthen. Okay, so we had the dollar yen rolled over at really key resistance here from last week at this 124.40 level. We broke through the previous support or previous resistance. It acted as support. We finally broke through that. And now we're in a retracement. Now, this is very much a range. The dollar yen has been in a very big range for a while. But you can see the next support level comes in at 123, 122.90. Spike low, 38% retracement. All comes in right there. 122.90. That's going to be probably pretty key support today. It is a 38% retracement. And now resistance. So any rally back up towards these support levels, you can see right here, right through here. Any rally back up towards 123.70. Remember 123.70 was support last week. That previous support is going to act as resistance on the way back up. We're in a range here. Stand by, folks. Hey, sorry about that. Okay, so let's go over to the Canadian. Wow, what just happened here? The dollar just took off. Okay, dollar Canadian. Obviously, we're going to have some really big resistance now up at 131. Okay, I think last week, if I'm not mistaken, on Friday, we thought 131, 131.15 would be resistance because there was 127% extension up there. If I'm not, yeah, right here. No, not right there. Sorry, guys. This way. Trying to recall from Friday, there was 127% extension up there. I just can't remember exactly where we drew it from. That's obviously a big resistance, but I think it was an intraday. I think it's this one here. It's 161% extension. That's what it was. We were looking at 131.15 last week, okay? And, you know, obviously we didn't make it all the way up there. But this 127% extension of this move, this is basically the handle on the cup and handle, okay? That comes in at, you know, 130.80. And then we have 130.60, which is the monthly high from over here, 130.65. So obviously, you know, as we're making our way up here, it's a bit of a problem. Okay, like I said, I do want to be long the dollar Canadian on dips. I'm just concerned about where it's currently at. So the high from last week was 131. That is resistance today. Obviously, it's pretty strong resistance up there. So overnight, dips to 129.80 was very well supported. And then we have 129.50, so 1.2950, 0.2980, both should offer support on the dollar Canadian. It is bullish. I know I exited my dollar Canadian, but it still doesn't make it not bullish just because I took profits. Okay, The dollar Canadian is still very bullish. Let's go take a look at the Kiwi. Oops. So here's the New Zealand dollar. Okay. The New Zealand dollar last week showed its true colors. When we shorted the dollar, when we shorted the Kiwi dollar up here at 60, I shorted at 66.80. And I shorted at 66.82 if my memory serves me correctly, and I got out at 42 right here. What a phenomenal trade that was if I would have held on to it for another 100 pips. But as you can see, that resistance there, let me remove this one. That resistance is very significant. It's going to be huge this week. Huge, right? Now, from the low to the high, the 618, that 618 held, but more importantly, that support held. Okay, so this is where we're at now on the Kiwi. There's the Kiwi. Significant resistance comes into play. Any move up towards 66, say by the time we get there, 66.60. 0.6660. I'm going to put that as an asterisk. That's huge resistance. We're still very much in a bearish trend. If we can make it up above 66.50, I'm a seller today. That's only 45 pips from where we're currently at, roughly. Okay. Support, very critical, at 65.60. And that's significant support. See, we're getting boxed in on the Kiwi, which is good. I mean, you know, we're starting to get boxed in on the Kiwi, which means that it's tightening here, which could create a pretty big breakout, even a recovery type of trade. Okay. Let's take a look at the Aussie. I'm going to do the Aussie really quick, and then I'm going to take a couple minute break, probably a little bit longer break. My nose is a little out of control here. All right, so here's the Aussie. So, you know, the Aussie would make me really nervous at the moment. I mean, you know, yes, I've got a Aussie yen short. Yes, I've got an Aussie Swiss long. They're basically neutralizing each other. I have a Euro Aussie long. Okay. But man, I'll tell you, this Aussie is not rallying for anything. Gold rallies, Aussie doesn't reciprocate. Okay. And so if you're long the Aussie dollar right now, it's you know, it's trading heavy and it's dangerous, you know, to be on the long side of the Aussie right now. Okay, now we do have pretty significant support coming in here at about 71.50, 72 cents. Now, if you don't know why that's so significant, we have to go out to a monthly chart. If you go out to the monthly chart and you take this low that was back in 2001, you take this low, the spike low of 2008, post-financial crisis low. Let's just do this. Okay. You can see we're coming into some major support between 72 cents and 71 cents. Okay. We're still 100 pips away from there. So why is that important? Well, it's about 100 pips away, but we still have 100 pips. We have 100 pips to go till we even get there. So be careful about being too premature the Aussie and trying to buy it here, because it's still trading really heavy. Like I said, rallying gold, it's doing nothing to the Aussie dollar, which suggests the Aussie's probably got further to fall. Okay. For right now, we have support at 72.60 and then 72.50. I mean, I'm just going to write down 72.50. Okay. So 0.7250 is support. resistance. I mean, we can't even get a rally above 73.10, but any rally up to 73 and a quarter is going to be sold. We're very much in a bearish trend. Okay. Now, when I come back, we're going to do the dollar index. We'll take a look at the Nordic currencies. We'll look at the peso as well. So don't go anywhere. I'll be back in a few minutes. Thanks. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. So, what we have to do as well right now is we have to take a look at the dollar index. We'll take a look at some of the Nordic currencies too. I think we have to take a look at all those, and then I'm going to take questions. So let's go over to the dollar index first. Okay, so here's the dollar index, and let's go over to the daily chart. And so the 38% retracement, as Paul pointed out a little bit earlier, got tested. So here's the 38% retracement, which obviously is going to be significant support. That came in at 96.42, and that was our low. I mean, our low was at 96.40. So we're just going to write down dollar index support, 96.40, and that's going to be significant, the 38% retracement. Okay. Now, any rally on this previous support from a couple of days back on, I guess that would probably be on Thursday, that low comes in at 96.88. So 96.90 on the way back up is going to offer resistance. And we are still very much in a range environment. Okay. Let's go take a look at the peso. Now the peso, I haven't looked at it yet this morning, but I know we were coming really close on Friday up towards, well, we hit 1630. So 1630 was resistance. I think we wrote down that on Friday, right? 1630 is being channel resistance. This is support. Okay, you see that? Resistance. 1630, and that stalled us, and you can see it. We may have put in a double top here. Well, we might try to. Now let's remove this. For you guys trading the peso, this is going to be pretty important, because if we come back and break through probably like 1620 here, you might set up for a double top, little pullback. Okay, so let's keep a real close eye on the peso here. So 1630 is resistance. Support, this is roughly 1620, but below 1620, we might get a bit of a pullback in the peso. Okay, it's up against resistance, really key resistance. Remember, we have durable goods orders in about 27 minutes that could influence the peso. Stand by real quick. Okay, let's take a look at the Nordic currencies. So here's the US dollar, Norwegian krona. Oh man, look at this. I mean, how significant is this resistance here? Now remember, crude is falling. Okay, with crude oil falling, you would think, just like the dollar Canadian would have already rallied. Well, the Norwegian krona is the same type of thing here. Breakout point is at 827 still. So support 809. We're just going to kind of keep your eye on that support level right through here, roughly. Okay, that resistance. We got a breakout that's probably coming sooner rather than later. you know, sometime this week, more than likely, like Wednesday probably. So 827, 809. Whoops, this is bullish. 8.09, 8.27. Whoops. And that is going to be a significant resistance. And you know, we're bullish. I mean, it's just we may be in a range at the top of the range, but man, this chart looks bullish. Let's go over to the Swedish krona. Same thing as the US dollar Norwegian krona, just real big resistances up ahead. Okay, and let me get rid of this really fast. Very well supported down here at 850. Resistance now is 865. $850 and $865. This one's more of a range versus the US dollar Norwegian krona is right up against, you know, its highs basically. The Swedish krona isn't. Doesn't mean that we can't turn bullish here, but you know, obviously we'd have a very big flag pattern in play. Stand by really quick. Okay, so here is your bias chart, and for the most part, it's done. Might add the S&P to it a little bit in a little bit, but there's your bias chart. And let me take your questions. A lot of questions have come in.